Hey guys, welcome back to Smart Trader and hope you guys are doing great. And today we are going to discuss about 5 trading hacks which I have learned in my 12 years of learning journey. So through this journey, I have understood certain tricks and hacks which would definitely be helpful for a lot of beginners, or let's say you're an experienced trader. These things, many of them would not discuss much, but following this will give you an edge in the market. So without wasting time, let's check out what are these. And before to that, if you're not subscribed to the channel, do subscribe and like and comment. So the hack number one, I call it the 9:15 rule. So if you know that the first 15 minutes, okay, the first 15 minutes candle, once the market opens at 9:15 a.m., you can see a lot of volatility happening, a lot of emotions are running wild, and a lot of too much of movements are happening during this period. So if you allow this 15 minutes to go through, if you allow the dust to settle, that is when you will get to know whether Nifty 50 or whether the stocks which you are tracking, which direction it is moving, or which side is the strength, and what is the size of the candle. Everything you'll get to know after the first 15 minutes. You would have seen a lot of traders waiting for a 15 minutes candle breakout upside or downside. So basically they are also avoiding this particular candle and taking a decision which direction to go, or whether this candle is having a strong bullish side or bearish side or neutral side. So by doing this, it's not that you can't make money here, but your stop losses will reduce in this particular area. So in my experiences, avoiding this particular candle initial minutes of the market open is a peaceful way of trading. So note down this 9:15 a.m. rule and always try to watch out this particular candle, then decide what your strategy is. So the second hack is reverse engineer big moves. So basically, let's say a stock has moved 10 percentage upside or even downside. Okay. So I don't blindly jump into this particular stock thinking, okay, today it went 10%. I will also buy it, let it go up. So what I do reverse engineering by checking, let's say the company details, company announcement, or let's say on money control app, I check the news, or let's say we will go to the Twitter or X and check out what people are discussing about this particular stock. What is the news behind? Is it like, for example, they say, okay, this stock is going to get advantage in the upcoming budget because there is some allocation for this particular sector. By knowing these things, you need to be like a market detective. So once you detect and find what is the reason behind this move, if you find a reason, that is when I try to take an entry in this particular stock, so that later when the budget is announced, the news is announced, or whatever the corporate action or whatever the result is announced, we get the advantage well before. So rather than entering late, we need to enter early. So reverse engineering needs to be done. Whenever you see a stock is moving 10%, 15%, 20%, don't just blindly enter. Like I told you, only if you find there is a reason, then only you need to enter. If not, you should not enter. Hack number 3 is the 2% risk shield. So basically what I meant by this is you should not lose more than 2% of your account. Okay, so now let's say your overall capital is 1 lakh rupees. Now whatever happens in a trade or in a day or in a trade, let's say you're doing intraday, let's say in a day you should not lose more than 2%, or if you're doing a swing trading, then in a single trade you should not be losing more than 2%. 2% of 1 lakh is how much? 2000 rupees. So you should not be losing more than 2000 rupees if you're having an account of 1 lakh. Now what will happen, for example, if you go with 2%, let's say you have a strict stop loss in a trade. Now what will happen? You made one trade error, two trade error, and let's say you need to make 50 errors, okay, back to back continuous streak of losses of 50 trades or 50 stop losses. That is when into 2% is equal to 100%. This is the only scenario where your whole account will wipe out. Initially your capital may be small, you may not think about it, but when your capital goes up, and if you lose your capital, you don't have backup to create this capital, right? So what you have to do, you should lose maximum 2%. When I say maximum 2%, it's up to you whether you want to take two trades in a day, then you're going to go with 1%, 1%. So maximum, if you lose, maximum you lost only 2%. If you want to go with four trades, then you have to divide it 0.5, 0.5, 0.5, 0.5. Four trades, maximum you lost is only 2%. Or if your single trade is only 2%, you're doing swing trading, then you lost only 2%. So in this way, you should not lose more than 2% in a day if you're doing, let's say, intraday trading, or if you're doing swing trading on a single trade. If you're taken 2-3 trades, and single trades exposure should not be more than 2%. So this is how you protect even if you lose 50 trades back to back. So generally 50 trades is not so easy, because let's say 1 week, 1 month, 2 month, 3 months can be bad. Let's say I'm saying swing trading. So in that you have enough time, to have at least one good trade and one bad trade, or you may take a gap also. So if you allocate only, let's say 10 percentage for a single trade, then 10 back to back trades will wipe out your overall 100% of your account. So overall, don't risk more than 2% if it is intraday for the day, or if you're a swing trader, then per trade you should not expose more than 2% of your account, so that, like I told you, even 50 trade goes wrong only, you will be losing all your account. So generally 50 trades back to back, only loss is difficult if you are so unlucky. But what I'm saying is the market conditions, let's say now recently October market corrected, now again Trump's tariffs came, again the market is correcting, so back to back your stop losses is getting hit. Now it can be 10 trades, 15 trades, 20 trades, so it's up to you. So when you keep at least 2%, it's about 50 trades, so you survive for a longer time. And when the market corrects, that is when you will be able to recover, only if you are having your capital. So that is the reason I follow this 2% car rule. It's up to you whether you want to follow 1% car rule or 3% rule. I want to mitigate the risk, so I'm going with 2% based on my accuracy. Hack number 4, trade the news, not the noise. You would have seen on Instagram they're talking about certain stock, that this stock is going to jump, it's going to become double, multi-bagger, and all those things will come. You need to always understand it's most of them are noise. 90% of them are noise. You would have seen after taking, it will not go up, or it'll get stuck, or it'll start, people will start dumping because they have taken the position in that particular stock and that stock is not moving. They want others also to take that particular stock, so therefore they will tell everyone, okay, this is good, that is good. They'll try to put it in groups, Telegram groups, Instagram and YouTube and all that, and therefore people will be victim by taking that particular stock. So what you have to do, whenever you see about a news, a stock, whatever is happening, you need to cross check if there is a news supporting it. If there is a news, real news which is backing it, that is when you have to take action. If not, it is actually a noise which you have to ignore. So next time, by experience I'm telling this, we get caught by word of mouth. People say this is good, some influencer told this is good, and we get stuck in it. So it's an experience. Never trust anybody, don't trust me also. Whenever you see a noise or something has been told, check about it, see the news, and is there any backing to it. If yes, go forward. If not, ignore it. The last hack and the important hack which will help you to build the discipline is the Friday review. So basically what happened, let's say Monday to Friday, whether you did intraday trading or swing trading, you would have taken a lot of trades on Monday, Tuesday, Wednesday, Thursday, Friday. So you need to cross check, or you need to check out your journal, what has happened, whether Wednesday did over trading because of emotions and all that. So that was one mistake. Okay, there was one more mistake which I did on Thursday. I did I didn't enter based on my entry, my setup. I entered based on emotional. Somebody told something, so I just took that stock. So two mistakes I did. Now let's say I did something good in this particular day. I did this good. Now you will review like this on the Friday once the market closes, let's say 3:30 p.m. Once Monday to Friday is done, you just cross check what you did in the whole week, so that you will not do this mistake in the next week, and you will follow these good thing in the next week. So by doing this, what will happen, you slowly eliminate the mistakes, or the discipline will come into you. This will become a Friday review, will become a habit. Now early morning you get up and you do brushing, right? So how do you do brushing? So initially you started, now it is a habit for you. So same way, initially it will be a little bit difficult to do this extra step, but later on this Friday review is gonna be a game changer for you, because you know what you have done and you need to be honest for yourself. So if you're doing a mistake, you should consider it as a mistake. If you're doing something right, you should do that and follow what is right and ignore the mistakes. I mean, don't follow this mistake in the next week, don't take it to the next week. By doing this, you will only refine yourself, you will only train yourself. You don't need others help. You can control your own mind and your strategies. So these were the 5 trading tricks which I learned throughout my journey. So these are not textbook tips, these are real life examples and which has helped me out. So which hack are you going to try first? Do let me know in the comments. Don't forget to subscribe Smart Trader for more such learning. See you soon in the next video. Till then, take care, stay safe.